Welcome back to True North Market Pulse, where clarity meets conviction. This week's episode is packed. AI picks, chart tactics, and how to dodge market traps. Let's go. Inflation came in hotter than expected, catching many off guard. Tech took a breather after its red-hot run, especially semiconductors. Meanwhile, oil prices surged as global supply tensions re-emerged. The broader market stayed mostly sideways. Tech cooled off, value rotated slightly in, and energy names jumped. In these choppy conditions, discipline matters more than predictions. Manage your risk, not your ego. Let's jump into our top 3 AI-powered picks for this week. Palantir continues to win defense and government contracts. It's not just hype. Their margins and data partnerships are strengthening. C3.ai has been volatile, but institutional money is creeping in again. Watch for trend shifts. This one moves fast on headlines and sentiment. Supermicro. Servers and AI infrastructure? That's Supermicro's lane. Their growth is explosive, but be ready for sharp dips between earnings. Let's shift gears and sharpen your edge. Reading a stock chart isn't just for traders. It's a key skill for any investor who wants better entries, smarter exits, and a deeper understanding of market psychology. So let's zoom in and break it down. Every single candle tells a story. The body of the candle shows the open and close. That's who won the fight that day, buyers or sellers. The wicks show the extremes, how high or low price pushed before settling. A long wick to the upside, sellers pushed back hard. A long wick to the downside, buyers stepped in. When you see small bodies with long wicks, that's indecision or tug of war. Large full-body candles, especially with volume, show conviction. Once you start reading candles like this, you'll never look at a chart the same way. Breakouts can be game changers, if they're real. A true breakout happens when price pushes above a defined resistance level. And it's not just the price you want to watch, it's the strength behind it. You need volume, the fuel, and you want RSI confirming the move. RSI stands for Relative Strength Index. When RSI climbs above 60 or 70 with a breakout, that's momentum. That's buyers stepping in aggressively. But if RSI is lagging or hovering flat and volume isn't expanding, the breakout might fail. Another signal? Look for backtests. After a breakout, if price pulls back and holds the former resistance as support, that confirms strength. Also consider context. Is the breakout happening after consolidation? Is it part of a larger trend? These details matter. Stack the odds in your favor. Clean levels, strong volume, rising RSI, and supportive structure. When those things align, you're not guessing. You're acting on quality. Let's quickly talk about this week's watch list. ARM, riding the AI chip boom. Airbnb, eyes on travel bookings plus summer strength. Chewy, oversold, but still a spec play on pet spending. Now for what not to do, let's break down 2 common traps that hurt new traders the most. False breakouts, also known as bull traps, are brutal. They bait and break out traders with a move above resistance, only to reverse and punish them moments later. The key issue? There's no confirmation. Maybe the breakout happens during low volume hours, or it moves too far too fast, and then volume fades. Without real buying pressure, the breakout fails, and price collapses back below the level. So how do you avoid the trap? First, wait for a daily close or strong confirmation candle above the level. Second, watch volume. A breakout without volume is suspect. Third, look for a retest of the breakout zone. If price pulls back and holds that level, it validates the breakout. This is where patience pays. You don't need to be first. You need to be right. Let the chart prove itself before you commit. Let's talk about another sneaky trap: divergence. Imagine price is climbing. printing new highs. But RSI is making lower highs. That's called bearish divergence, and it's a red flag. It tells you momentum is not keeping up with price. Buyers are running out of steam. Now add in fading volume, and you've got a textbook setup for a reversal. This trap lures in late chasers. They see the breakout, the new high, the excitement, but they're not watching momentum. RSI is saying, this rally is weakening. Volume is saying, fewer people are buying. That combination is dangerous. It's often the setup before a pullback, correction, or full reversal. So what should you do? Step back, zoom out, wait. Let RSI reset. Let the trade come to you. And remember, the best trades don't need to be forced. They flow. Remember to check out our new book, True North Market Strategy. It's packed full of great information for new investors and traders. Available on Amazon and Kobo. That's it for this week. Stay focused. Build slow. Move true north. See you in the next episode.